Hey everyone, and welcome! Today, we're going to pull back the curtain on the financial world to explore the powerful, unseen engine that makes it all work, back-office operations.
Okay, so picture this. You've just hit buy on a stock you've been watching. Poof! In what feels like an instant, the shares are in your account and the money's gone. But what actually just happened in that split second? What incredible machinery just roared to life to make it all seem so effortless? Well, that's exactly what we're about to find out.
Yeah, we're talking about the market's hidden engine, the part of the financial system that, when it's doing its job right, you don't even know exists.
So what is the back office? Well, at its heart, it's the backbone for every single financial transaction out there. Its job? To make sure every trade, from your tiny purchase to a massive institutional investment, gets executed, processed, and settled without a hitch.
You know, the easiest way to get your head around this is to think of it like air traffic control, but for money. Seriously, just like controllers guide countless planes safely to their destinations, the back office directs trillions of dollars in securities every single day, making sure everything lands exactly where it's supposed to, avoiding total chaos.
And because of that role, they're not just, processors. They're literally the guardians of the entire system's integrity. Their work is what allows all of us to actually trust the markets.
And that trust, it really stands on 5 huge pillars. First up, you've got accuracy, making sure every single detail is spot on. Then there's compliance with all the rules and regulations. Risk mitigation, that one's huge. It's all about spotting and fixing problems before they blow up. Then you have operational efficiency, which just keeps everything moving fast. And all of that leads to the big one, confidence, knowing the whole system is reliable.
All right, so to really see how this all clicks into place, let's actually follow a single trade on its journey, from the moment of execution to its final settlement.
Let's keep it simple. We'll say you just bought 100 shares of a U.S. stock. We'll just call it XYZ Corp. You've clicked the button, your part's done. Now, the back office springs into action.
Okay, the first thing you got to know about is something called the T+ cycle. T is super simple. It just stands for the trade date. That's the day you actually bought the stock. The number after the plus sign, that just tells you how many business days it's going to take for the whole thing to be official, for the shares to legally be yours and the money to be in the seller's account.
And here's the thing, not all markets are the same. Some trades, like in a money market, might settle on the very same day. That's T+0. Over in Europe, stocks usually take 2 business days, so T+2. But for our example, buying shares in XYZ Corp, that's a US stock, so the cycle is just T+1. That means the whole deal is officially done and dusted just 1 business day after you made it.
But that brings up a really important question, right? In that one-day gap, how do you manage the risk? How does the seller know they're going to get their money, and how do you know you're going to get your shares? It's not like you're going to mail each other a check and a paper stock certificate.
The answer is all in how the exchange is set up. The gold standard here, the thing that minimizes almost all the risk, is called DVP, delivery versus payment. It's exactly what it sounds like. The shares are only delivered when the payment is made. It's a simultaneous swap. The seller side of that coin is RVP, receipt versus payment. And then you've got FOP, or free of payment. But that's really for stuff like gifts or transfers where no cash is changing hands. For our trade, DVP is the key that keeps everybody safe. Okay, so we've got the timeline and the safety net down. Now, let's get into the nitty-gritty. What information does the back office actually need to make our trade happen?
The back office deals with a ton of different assets, but the 2 big ones you'll always hear about are bonds and equities. Super simple breakdown. Buying a bond is kind of like you're giving a loan to a company or a government. Buying an equity, a stock, is like you're buying a tiny slice of the company itself.
And they are totally different beasts. Bonds, they're generally lower risk and give you these fixed interest payments. Equities, on the other hand, well, they've got the potential for much higher returns through growth and dividends, but yeah, they come with more risk. The back office systems have to be smart enough to handle all the unique rules for both.
So for any trade to actually work, the economic details, the what of the trade, have to be absolutely perfect. We're talking about the exact trade date, the unique ID for the security, that's the ISIN, the quantity of shares, the price, and this is a big one, the counterparty. Who exactly is on the other side of your deal? If even one of these details is off, the whole thing can just fail.
But knowing what you're trading isn't enough. You also need to know where everything is going. And that's where standard settlement instructions, or SSIs, come in. The best way to think of these is like the super specific routing numbers for both the stock and the cash.
This includes stuff like account numbers and a BIC, that's a bank identifier code for everybody involved. It even specifies the place of settlement, or PSET, which is the central hub where the final exchange happens. And I mean every single detail has to match up perfectly.
So let's tie this all together. Why does all this incredibly detailed behind-the-scenes work actually matter so much to, well, to all of us who use the market?
The short answer is because they are absolutely vital. They are the engine that makes sure every single transaction is processed correctly, legally, and by the book. Without the back office, the entire system would just grind to a halt in a total mess of errors and arguments.
And really, that's the bottom line here. All that meticulous, invisible work that the back office does, that is the foundation of market trust. It's the reason you can hit that buy button and just know, without a doubt, that the system is going to work exactly the way it's supposed to.
Kind of makes you think, doesn't it? What other complex, invisible systems are humming along perfectly in the background right now, just holding up our daily lives without us even noticing?